Market bounced, but was it a healthy rally or just a classic dead cat? Welcome to Daily Market Waves from Investing Angles, where every candle speaks, every wave whispers truth, and we chart the turn before the herd even blinks. Today's lineup is packed. Volatility, cooling, but is the storm over? Dollar, sitting on the fence. Bond market, huge alert, extended coverage you don't want to miss. Oil, did today mark a bottom? Silver and gold, what the candles just revealed. Natural gas, holding the line, but at what cost? Uranium, reversal on deck? S&P 500, multi-angle breakdown. Nasdaq, Elliott Wave whispers. Features of the day: Amazon, Palantir, and Emerging Markets ETF, EEM. And a quick story that speaks volumes. One of our series members, Nick R., shared his gain-loss ratio since January. Ready? 99.51%. He said he's never traded like this before until he started following Investing Angles. If you're tired of guessing and want to trade with clarity, structure, and a statistical edge, you are in the right place. Smash that like, tap the bell, share this with your crew, and drop your favorite setup in the comments. Ready to decode the bounce? Let's dive in. And as usual, we start with volatility index. This is the candle closure. What we are seeing here, that the daily candles are strong bearish. No questions about it. And there is a very good chance that we will be seeing a move down tomorrow. The only question that I have, whether this move will stay or it will be just a temporary one. This is the question, because we have quite weak technicals right now, and the support is somewhat on the lower side. And if we look at the two-day frame, it's also quite complex. So for the day, it's both of them bearish. One is inside down for the futures and the bearish harami for the 2-day. But both of them require confirmations, and this might come only on Friday. And considering the damage, technical damage that was done on the weekly and monthly frames, I would say that we should stay at least neutral until we get some information on the weekly frame on Friday. So volatility is neutral. However, there is a fairly high chance for a decline tomorrow. Now let's have a look at the dollar. What we are seeing here is that the dollar is holding. So this is possibly a bottoming formation. However, we need a confirmation in either way. So on the daily frame and the 5-day frame is closing in 1 hour 13 minutes. So this candle so far is holding above the 1000 days moving average, which is the red line, and there is a chance that this candle can become a reversal one. However, nothing is confirmed. I would say that the dollar is neutral also. However, there is a fairly good chance that it is forming a bottom, potentially a double bottom. Now let's move on to our bond market and try to decode what the candles and technicals are telling us. So first of all, this is the message for my Canadian guys, and this is what we were telling just 2 days ago: potential ending diagonal for Canadian 5-year government bond yield. So far, it is moving strongly higher, and we are seeing very green candles here. So the move towards 335 or 391 could be very fast. Now let's have a look at the US market. So what we are seeing from the candles perspective, the 10-day frame, or 10-year yield, and the daily closure. So if this candle was formed green, I would say it would be bearish. However, this red candle, considering the bigger formation, is very neutral at this moment. And considering some technical support for a bullish move, I would say it's most likely opposing doji. But let's see how it develops, what kind of support we'll get in the next couple of days. If we look at the 2-day frame, it's formed a continuation candle, and this candle technically confirms a bottom on the 2-day frame. And if this momentum holds for another 2 days, this is going to be a weekly reversal, bullish reversal, bullish engulfing candle. If we look at 2, 5, 10, 20, and 30-year yields, what we are seeing is technically very strong bullish formations on the 2 and 5-year. 10-year is kind of neutral, and the 20-year and 30-year, they formed red candles. They moved lower. However, these candles are incomplete dark cloud cover, and the chances for moving higher are significant at this moment. And I would like to emphasize a freshly made 8x20 EMA bullish crosses for these two. Well, that's a bullish stance for all yields. Now let's have a look at the biggest concern that I have right now. So this is the spread, 10-year minus 2-year in candles. I highly doubt somebody else is doing it, but this is what we can see. This is the daily closure. No doubt this is a huge bearish engulfing. And tomorrow the spread will go down. If we look at the 2-day frame, which also closed just a few minutes ago, it's a huge hammer or gravestone doji. No doubt that this is going to be a reversal here. We might see a little bounce higher, but in general, the direction will be down, most likely towards the 0 line. And if we look at our Elliott Wave here, now we are seeing a complete diagonal for potentially wave C of a bigger correction. So this is wave A, which is not an impulse, wave B, and this is wave C as an ending diagonal, non-overlapping, but still a diagonal. This is, and the concerning thing that these waves are overlapping here, as you can see, and the wave 1 is not an impulse as well, and the same we can say about this one. So if this is the case, if this hypothesis holds, then we know that it is expected to return towards the level of origin. So it's going to be about minus 0.54%. Well, that would be a return, and we know what it means for the economy, for the markets overall. This is the biggest concern in our bond market update. Now let's move on to TOT and see what TOT is telling us. So today TOT closed the daily frame with a bullish candle. This is the piercing line, so it closed just a couple of basis points above the cutoff line. Otherwise it would be a thrusting below. Now it needs a confirmation. If it is confirmed tomorrow, and if it closes above this level, which is Tuesday's high, then it will be confirmed, the bottom will be confirmed, and we might see a rally. However, if it fails, it will be a bearish continuation candle. And if we look at the 3-day frame, after this huge 3-day candle, bearish engulfing, in 3 days by Friday, it is needed to be negated. So far, I'm highly skeptical about this, especially considering some fresh technical signals, but let's see what can happen in this world. And speaking about the weekly frame, so far the candle is bearish, but for true confirmation and the true reversal, it needs to close below this line. It would be a strong bearish move. And now let's have a look at the chart that we've been tracking so far. As you can see, right now it almost hit our target, 84.85. And right now it bounced, but I would say that this is potentially, from Elliott Wave perspective, this could be an impulsive wave complete. And now let me zoom it a little bit. So this is potentially a wave 1, 2, 3, 4 here, and wave 5. So if this impulse is complete, now we would be looking for a correction here, and after that we will be looking for another even stronger move down. That's the perspective for short-term perspective for TOT. And the final one I would like to share is the 20-year yield, which is inverse counterpart for TOT. What we are seeing here is also an impulsive wave up, and most likely this wave is corrective, what is right now forming. This would be an ABC of potential wave 2 and a move higher here. However, the wave is too young and we are looking for it to mature. Once we have more data points, we will update the chart and share it with everyone. Now let's move on to the commodities section, and we will start with oil. What we are seeing here is, after a very strong move down, oil formed a bullish candle. However, I would like to say that this candle is still below all resistance lines, and in order to confirm a bottom here, it needs to move a bit higher. If the momentum holds and we are seeing a green move tomorrow, we could consider a bigger rally here. However, if we look at the bigger frames, for example, 8-day frame, which is closing tomorrow and in 23 hours, in oil needs quite a bit of a rally in order to reverse this one, and it would need about 8%, another 8% in order to mitigate this bearish candle, and about roughly about 11 to 12% in order to make it at least not bearish, somewhat neutral bullish. Well, whether it's possible or not, I will leave this question to you, but my take is that this would be highly improbable. And the weekly candle has been freshly made following 3 methods, and if we can see a green candle here, even slightly higher up to the midpoint of this red candle, it will still be bearish continuation candle. Speaking about the chart, this is where we left it yesterday. This is the chart that we shared with our subscribers later overnight. This is potential completion of the first impulse down, and now we are looking for a corrective action ABC for wave 2 or wave B of a bigger structure downward. So once this is complete, we are expecting another wave downward. When it's going to be complete, it's difficult to say. Timing is the most critical path, and it's the most challenging to forecast. It could be from couple of days to couple of weeks we can see development of this wave. And the final thing about oil, 3 oil companies, ExxonMobil, Chevron Corporation, and ConocoPhillips Corporation, they all formed bullish candles today, bullish engulfing, and there is a good chance that we will see advance tomorrow. However, I would like to point that none of them closed above the first resistance line, and this resistance line, like 8 days moving average, could be a very strong resistance tomorrow. That's all about oil. Now let's move on to the precious metals. And not to precious metal. First, we'll talk about natural gas. So what we are seeing here is just the candle take. So first of all, natural gas closed today with a bullish candle on the daily frame, and has a very good chance to form a bigger momentum on the 3-day frame tomorrow. If it does, then we will see a rally, potentially a rally. And I'd like to say that in order to confirm a bearish reversal, natural gas needs to close below 3.81 on Friday. The same on the 10-day frame. So the same level. If it closes below, then it will be for sure a bearish move for mid to long time. However, if it fails, it will be bullish. And yesterday we discussed with our subscribers saying that natural gas made quite a few moves that invalidated a few counts, and we issued a new potential counts for natural gas for mid and short term. If these candles indeed confirmed in the next couple of days, we might see a very strong and technically supported move upward. Now let's talk about silver and gold, about precious metals. Let's start with silver. So silver formed technically a bullish candle today. However, it's not enough to reverse and to confirm a bottom. So this candle, the red candle that silver made on Friday, was way too powerful, and right now silver already spent 3 days trying to negate it. So far, unsuccessfully. And I would say that there are better chances for silver to continue lower tomorrow. The same situation is on 2-day frame, and if silver doesn't close above the high of this red candle, which is a 2-day, and it's approximately 33.958. Well, I'm not even measuring this move. This is highly improbable at this moment. And the same for the weekly frame, a huge bearish engulfing. In 2 days, silver needs to close above this red candle in order to make a dent in the bearish odds. So far, this is highly improbable. Speaking about the chart that we've been tracking, I think that this move higher technically invalidates this blue count because of way too large wave. And I think that we would be looking for wave 2 here and potential ABC correction. Or this could be also wave A of a bigger correction, and I'd like to have it as well. So this is another possibility. So we might see this is wave A, then it's going to be wave B and C of a bigger bounce here. So this is what I'm talking about, potential this one. And we change the change the wave here. And I think that it's, well, let's keep the blue count for now. It's still kind of valid, but very low probability at the moment. And now let's have a look at SLV. Technically, SLV completed a bottoming formation on the daily frame. However, it's got rejection at the 200 days moving average, and the technical support is kind of low on the trust. If it continues higher, well, we will be consider it. However, the damage, very strong technical damage, was done on the larger frames, particularly on the weekly one, and I'm not expecting a reversal to happen. Speaking about gold. Gold is slightly different from silver. Well, silver is formed already an impulse down, Gold did not, and there is a good chance that it might see a higher high here or new all-time high before it starts a real wave down. And this is RSI on the daily frame, and even if it does higher high, I highly doubt it's gonna make another high here. So maybe we'll see another low here, and it would be a strong divergence on RSI. Speaking about the 2-day frame, we'll see. This is a big test tomorrow. If it forms another bullish engulfing here, well, then we would be looking for an all-time high potentially. However, it's not confirmed yet. Let's see how it closes. And now let's move on to the next commodity, is uranium. Let's start with candles. So an interesting development in uranium, and this is a very strong bullish move here on the daily frame, and with a very good chance to form a 3-day reversal here. So if the momentum holds on Friday, we might see a bottom on the daily frame, a bottom on the 3-day frame, and a reversal, strong reversal formation on the weekly frame. If it happens, this could be a bottom. And now let's have a look at our charts. So let's start with this short-term one. This was the one that we shared back in the middle of March, saying that the flag, now the move hit the middle of the target, and there is a good chance that it is moving right now in impulsive manner. However, the wave is very immature at this moment, and I would like to see a bigger wave before making a strong call. So far, this is a potential for a bottom. And if we look at our long-term frame, something that we've been tracking since December 19, 2023, this is the chart that we shared then. Right now, again, so uranium, energy fuels, you in the middle of the target area that we identified, and 377 was our ideal target. So there is a possibility that this ending diagonal for wave C of 2 is complete, an expanding ending diagonal. If it does, then we might see a very strong and significant move towards the origin of this diagonal. And the diagonals work both ways, ending diagonals down or ending diagonals up. So this would be the level of high 903. That would be quite an amazing move. 903, let me mark it here. This is the potential for the move once the ending diagonal is complete. And okay, so it would be here, and if we measure it in percentage wise, that would be quite a move, 138%. Let's see if energy fuels manage to form something very significant on the weekly and maybe bigger frames. So we would have quite a rally here. Well, that's a very positive news for uranium. Now let's move on to our stock market, and we'll start with all indices as usual and the candles. What we are seeing here is a very strong move today, bullish candle, no doubt about it, and it made it through multiple resistance levels, now support. However, I would say that the technicals are not on the bullish side yet, and I am very cautious at this moment because all indices made very strong bearish moves and very strong bearish damage on multiple frames, including weekly, monthly, and quarterly. And even I'm seeing this as this move up, it's most likely it's gonna be like a bounce, and we will see a reversal very soon. Especially you can see this looming crosses 50 over 200 days moving average, that cross for S&P 500 for Nasdaq. Now let's move on to the next chart, and this is the weekly frame. In order to make a reversal, indices need to reverse the odds on the weekly frame first, and I would like to see it happen on Friday. If they fail, well, that will be just a bearish confirmation, but I'm very skeptical until I can see it on Friday. Next thing that I would like to discuss is this one. This is the short-term frame, 5-minute frame for S&P 500 index cash. So what we are seeing here is a fairly clean corrective wave off the bottom. This is potential bottom. We are seeing wave A, a triangle, a fairly clean triangle, and a wave C. Or, yeah, it could be wave C. However, I would say it's most likely it's WXY formation. Then we have a wave B and potential impulse for wave C of A. I would say that this is gonna be a bigger correction here. Something like this. This is the chart that we left yesterday. So this is possible wave A. We will see maybe wave B here, another wave C before the market goes down. I think that with this move, technically this wave 4 will be invalidated. It's already invalidated because of this move. It overlaps with this wave 1. So I can safely remove this count for now, and we will be tracking wave B of a larger degree. So because of this corrective structure at the very beginning. So that's our roadmap for the next couple of days, maybe even couple of weeks, because the wave A, this was a very significant one. So the wave B could be even longer. Let's see how it develops. However, a sharp one is also possible. Now let's move on to the sectors. All sectors formed today bullish candles, and there is a very good chance we will see a move higher tomorrow. However, I would like to emphasize that none of these are confirmed yet, and there is a good chance that we have lots of overbought instruments. They might just get a move down at this point. So until we see a confirmation, at least on the weekly frame, this is at least neutral. And the same situation for large stocks, for large caps. Every stock made bullish move today, and there is a good chance for seeing higher high tomorrow. However, I am very skeptical about the possibility of confirmation. And now let's have a look at Nasdaq. We'll see where Nasdaq is aligned with what we are seeing for S&P 500. Yes, it indeed is the same. So technically we can remove this blue count right now and start tracking to other counts. So it's either purple or the red one. So they are practically the same, just little semantics difference between the counts. So that's potential completion here. Let's remove the blue count for now. And we will be looking for wave B. So this is potentially the wave A of a bigger B, which will be followed by wave B and by wave C. That's the possible either flat or another structure like triangle, for example. which would be a very mind-blowing. That's the perspective for Nasdaq for the short term. Now let's move on to the features of the day, and we will start with Amazon. We haven't done Amazon for a while, and now it's time to refresh it. So Amazon formed a bullish candle today, and there is a good chance it might continue higher. However, I would like to say that Amazon was strongly bearish on the weekly frame, and if it closes the week like this, it will be a bullish reversal. But I would like to move it a little higher, potentially above 50 weeks moving average, in order to really confirm this candle. And speaking about the larger frame, Amazon just confirmed a reversal on the monthly frame, and well, we can see that it tries to reverse it, but it might end up just being opposing candle. We might see the whole months of back and forth moves until a doji is formed here, and the next months will be a real move down. Speaking about technicals for Amazon, Amazon is very close to form a monthly MACD bearish cross. It would be a very significant one. It would be the second highest on record. And I ran some preliminary statistics for the MACD crosses. There were only monthly MACD crosses. There were only 8 of them for the entire life of Amazon. And the statistics say that the average decline once we have a cross, it's about 51% with a range of 30 to 94. At this point, Amazon at the lowest point lost 32%. So it's already within the range. So that might be it. And the cross is reversed and everything, and Amazon goes higher from here. However, I have a little question here. So what I'm seeing here that is this one. We have a big divergence on the monthly frame on MACD, and it's a concerning point. It's a very concerning point. So if this cross is indeed formed at the end of April, then we will be looking for lower lows. However, at this point, just an average target, 51% loss, it would be somewhere here, and this would be the target, potential target for Amazon 115. Well, let's see how it develops. We will be monitoring it closely for the rest of April. And now let's have a look at the chart. So this is our great call. For those who was with us on February 4th, we made this call on Amazon when it was 242, and since then it lost over 33%, landed exactly here in our target area, and is right now bouncing. I think that this is gonna be wave. We can say that this was probably wave A. Now it will be forming wave B, and after that it will be forming wave C. Well, that's the targets remain the same for now. However, if depending on how high wave B goes, if it, let's say, goes an approximate 50% of the length of wave A, then we would be looking for a much lower target for wave C, and this would be, so where is our 51%? 51% is here. So this would be something like this. Well, that's again an estimate, and we need to see how Amazon develops its wave up and what kind of wave it is. That's the perspective. Now let's move on to the next one, and this one is Palantir. The similar situation that Amazon did, a strong bullish candle, potentially forming a bottom. However, it was a very strong damage on different frames on the weekly, and particularly I keep this 10-day frame here because of its strong dark cloud cover, something that we discussed a few weeks ago, saying that Palantir would have a chance to bounce here, and after that we will see a move down. And speaking from the monthly perspective, the candle here on February wasn't very strong bearish. However, it had some quantities or some qualities of the bearish candle, and the next one in March wasn't also decisive. So we're still waiting for a continued move. And I'd like to emphasize that Palantir is grossly oversold. This is an RSI, monthly RSI. It's 89 right now. So it must go down at some point, sooner or later. And speaking about the Palantir chart, this is the one that we made on March 12th. And it is so nice to see that chart doesn't need any update. So technically, this is Palantir is following the path very nicely. So we can remove this possible channel here. We are seeing for wave, Palantir made an impulse down, fairly clean, which we'll consider as a wave A or 1. Now it is forming an A, B, C, possibly for wave 2 or B. And once it's done, somewhere here between 98 and 105, I would say we would be looking for a continuation down. And today is, let's update it, April 9th. And the last chart for Palantir, this is the one that we shared way back in January, saying that Palantir, when it was 78, it's getting close to its wave 3. And after that, we will be seeing a correction. That's exactly what happened. It stopped here and moved down towards the target that we then identified. Right now, it's made a classic move in impulse down. Now we would be looking for a corrective action, maybe a little higher, and then another wave for the correction. And this one was done last time in March 19. Today is April 9th. So far, everything works greatly for Palantir. And the final feature of today is emerging markets. Emerging markets ETF, EEM. And we will start with candles. So first of all, what I'd like to say is the monthly frame. At the end of 2024, EEM formed 3 black crowns here. And after 3 failures trying to negate it, it is on track to form another red candle, potentially making it falling 3 methods. On the weekly frame, EEM possibly formed a double top here. And if it is technically, it is already confirmed. Now it is moving down. And another concerning development is on the quarterly frame. After potential 3 black crowns, there was lots of quarters trying to negate it, and finally in Q4 2024, a bearish engulfing. Q1 formed a thrusting line, and now we are looking for another red candle here. So candles are bearish for emerging markets. And now if we look at the Elliott Wave, this is the chart that I haven't been touching since February 3rd, 2024, and originally made it in December 2022. So what we are seeing here is a very interesting formation. Some folks suggest that this is a leading diagonal, and I'm talking about this potential 1, 2, 3, 4, 5. Some say that this is a leading diagonal, this is a correction, and now we would be looking for a move higher. However, a very simple test fails because this wave, middle wave, wave 3 potential, it's the shortest in the sequence of 1, 3, and 5. Thus, this cannot be an ending diagonal, and this is most likely wave B of a bigger correction. So we have wave A, we have wave B, and we have wave C. This also could be a W, X, Y correction. So what I'm seeing here is a very concerning pattern here. First of all, do some cleanup here. So this could be an extended wave 4 for wave C, and also we can view it as a bearish flag, so potentially bearish flag which is about to be broken. And if we try to measure this bearish flag, trying to get some ballpark estimates of what could be the targets for this one, I would say that this is exactly where we are looking for wave C. So these two targets would just overlap here. So that's the perspective for emerging markets. And I would say if they close with in April with a strong bearish candle like this, or slightly lower, slightly higher, it wouldn't that much matter. Then we would be looking for another move down, let's say on average about 40% loss for the ETF. Well, that's the perspective. And now we can wrap today's session. So from volatility retreat to oil's possible rebound, from gold's silent signal to uranium's unexpected turn, today's bounce might look sweet, but the candles are telling a different story. Nasdaq, SPX, and the bond market all dropped clues. Did you catch them? Want setups before the headlines hit? Join our private Discord where master trader Kyle posts real-time calls with unmatched precision. And huge thanks to 14,000 plus sharp traders riding the waves with us. Your support drives every chart we share. Got a ticker you want to analyze? Say so in the comments. For full Elliott Waves, deep dive candle reads, and multi-time frame stats, head to investingangles.com. And yes, we are now on Blue Sky too. Same handle. Come support and follow us there. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.